Hello Beatty here. Bitcoin is now starting to drop here inside of this massive bullish wedge that's been forming here since June of 2019. As we can see here with the 4-hour chart, if we were to zoom in on this chart, we can see right now we massively dumped today over 10%, and we are heading towards the support level of this flag. And my target right now is going to be this area here where we've got the 200-week moving average, as you can see with this dotted gray line, alongside with the support here that's been acting as a support since June of 2019 inside of this beautiful bullish channel that's forming here. If we look at this chart here, you can see we've got this bullish channel forming, and of course markets are following equity markets, so there is a very good chance here that we're going to see a bounce at this level as long as equity markets do not see continued lows. And so I wouldn't say there is a bearish scenario in the macro or long term, but as we've talked about in our last few videos, over the short term and in the medium term, there is definitely a bearish case right now for Bitcoin to still see some lower levels, possibly heading back down to that 55.50 area where we've got that 200-week moving average here in the gray, and then we've got the support level of this flag. Now, if this area ends up breaking, that could be very detrimental for Bitcoin over the long term, but I'm going to talk about why I don't think that will happen based on this major jump that we've seen with traditional markets over the last few days. Of course, today we did close in red, but at the end of the day, we're seeing a massive quantitative easing measure being implemented by the feds as a stimulus to our economy during this global pandemic, and we're going to look at unemployment numbers as we have hit 3.2 unemployment claims just this week alone, and that is starting to break records. And of course, we are going to potentially see more unemployment claims as more businesses shut down during this global pandemic. But knowing that equity markets have seen this recent bounce, I'm very confident that Bitcoin will most likely find support along this 55.50 area, at least for the short term, for us to assume that we will continue a bullish break to the upside and finally go beyond 7,000, as we know is a major resistance level right now with the macro falling wedge that is forming as well here. If we were to pull up that macro falling wedge, we can actually look at several different levels of support, and 7,000 is a very major level. Now, what is also interesting about this is if we look at volume here, you can see when price action went down to that 39.90 area, down to around 4,000, we saw even more buyers here than sellers. And so we know everywhere in this region is a very good region where we have massive buy pressure, and we can even see that depicted by the volume chart to the right. As you can see in that white area, you can see we've got massive volume here. And so knowing that, I do not believe we will see price action back down to those levels. I know a lot of people have been wanting to get back down to that $4,000 level. I just don't think that will happen due to the fact that we know there's massive buyer volume here. And even in this lower region of that $5,500 area where we have that 200-week moving average, we know there's also massive amounts of buyer pressure, as you can see here, with a lot of green when it comes to volume. And so knowing that, I believe that we may come down to test this, form a lower low, and potentially form a pattern here where we've got this support level holding and then a potential bounce from that area. I know this chart doesn't look the best here. I'll go ahead and clear this out. As a matter of fact, I want to show you this macro chart, but first and foremost, I want you to see the micro support levels that I've drawn out here. You can also see this green right here is that 200-week moving average. And of course, you can see even below that 200-week moving average, we've got major levels of support. Each one of these dotted lines are a major weekly support or resistance levels from the daily and weekly chart, looking back all the way to the 2017 run-up. And so knowing that we've got all of this pressure here and all of this volume, as you can see here, I don't believe we will go into this area. I think this was a very good accumulation zone for those that got positions in, But for now, we'll see a push down to that 200-week moving average, where we'll most likely see a bounce. And from there, we can determine whether or not we'll see a bullish break and a continuation to the upside. When we look at other numbers here, you can see with hash rate, we're starting to come back up, which is really good, especially as we approach this upcoming halving. I know I say that weird, so don't get on me like every other video. I see we've got Crypto Brand, Sean, Peter, and Matt Z-Beats in the house. Good to have you guys on the live stream. But once again, that halving is coming up soon. And so we want to see these hash rate numbers starting to increase, which shows miner confidence in Bitcoin, because we don't want to see a miner capitulation where nobody ends up wanting to continue mining Bitcoin because it's unprofitable. But as you can see, we're seeing a nice bounce here. And so we're hoping to see that continue. Of course, looking at transactions per day, we're seeing these lows continue. I'm not surprised, especially during the fact that we're going through this global pandemic. There's just a lot less economic activity, and therefore we can expect a lot less transactions to be on the blockchain itself and in person, of course, as we can see reflected by the economy and the types of numbers we're seeing with unemployment. And so one thing I want you guys to see here is the crypto and fear index went back from 10 to 8. So that means extreme fear in the market. And remember, we want to buy into fear. We don't want to run away from fear. And so I think that's very positive for Bitcoin, knowing that there's still extreme fear in the market. And then if we look at traditional markets on the close for Friday, you can see they had a great week. There were two very bullish days. We saw one of the best days ever in the market, but of course that doesn't mean much when we've had some of the worst days. And if you look at the past, the only times we've seen the best days were during the Great Depression. And so knowing that, of course, on Friday, we closed almost 1,000 points down for the Dow, and I don't think that's a good sign for Monday. However, we'll have to wait on Sunday to see how futures market open. And of course, I believe Bitcoin will also be able to stay above that $6,000 level into the weekend. And I think by Sundays when we'll see a possible push to the downside to that 200-week moving average. And it might only be a wick, to be honest with you guys. And what would be really cool to see, in my opinion, is for a lower low. You can see we've got, I'll go ahead and draw this out here. We've got one low formed here. We've got another low formed here. I'd like to see a lower low form here. So we've got this descending level of support form and then a push to the upside, because that could be very positive for Bitcoin. But the good news is we broke out of the overall bear flag that was forming here, where we've got this bear flag. And of course, it is a very positive thing here that we're finally breaking out of that. Right now, we're seeing some support here at 6,000. I believe we'll continue to see that support. As you can see, that's a major support line here. And of course, I think Sunday with futures markets opening, if we see positive gains in the market, which is very possible, I think it's more unlikely though, just because of the fact that we closed Friday so low. But if we do see higher numbers, then of course, I think that would be the time Bitcoin would go ahead and see a run up. But it could possibly be that Monday is also a down day for Bitcoin until we start to see more and more quantitative easing and stimulus implemented by the Feds that may allow traditional markets to continue up. And by the way, the reason we're seeing a run up with markets in the equity markets and the S&P 500 and the Dow is because if we look at the Fed's balance sheets, they have come to historic levels of holdings in the market. You can see surpassing $5 trillion with this recent $2 trillion stimulus package that was implemented. And that is very bad for our currency over the long term, because it really starts to inflate the dollar, and investors are all going to be looking for a deflationary asset if the US dollar is going to continue to lose its value. And that's where Bitcoin comes in. I was reading an article today, which was very interesting, and talking about how if Bitcoin does not start to see a run up here soon, then it may be the end for Bitcoin, because this is why Bitcoin was made. And I believe Bitcoin will prove itself as it always has in the past, because this right here is ridiculous to see over $5 trillion in our central bank being injected into the market, and all of this quantitative easing and stimulus, all that's going to happen is we'll see all of these other major banks like the Bank of Japan, the Bank of China, all of these banks are going to follow the US and also inject more into their economies. And that's just going to create an artificial value for all of these economic numbers that in the end won't mean anything when our value of our currency is going to just continue to drop, and everyone's going to be looking for a deflationary hedge against it. And really the ones that hurt the most are the bottom 50%, because those are the people holding cash. Those are not people holding assets. The people holding assets are going to be fine because asset prices will go up as we start to see inflation in the US dollar, but it's really going to screw over the people in the bottom 50%. And we're already seeing that, as you can see here with the Fed's chair, Jerome, saying we may well be in a recession. You can see it says the virus is going to dictate the timetable. The sooner we get through this period and get this virus under control, the sooner the recovery can come. The Federal Reserve is working hard to support you now. Our policies will be very important when the recovery does come to make that recovery as strong as possible. So as we've talked about, we're expecting a strong recovery. But if we look at the recent $2 trillion stimulus, there was an act that was actually in there preventing the information request of the federal bank's meetings, which was a very, very, I would say, controversial addition to the stimulus bill, which basically means we don't know what the feds are doing, and they are closing their doors to transparency when it comes to trying to find out what's actually happening behind the doors of the federal bank. And so that, in my opinion, when transparency goes down, that typically is not a good sign. So you can see it says when it comes to lending, we're not going to run out of ammunition, and that just doesn't happen. And they're basically saying we're willing to print as much money as needed in order to get through this time. And that's not a great solution, especially as the US is now leading in COVID-19 cases. And so it's very interesting to see what's happening right now, because this has never happened in the history of the United States or in the world. This is a global pandemic. You can see unemployment numbers, the highest numbers ever recorded here, 3.28 million. And that, in my opinion, is very worrisome over the long term. However, I do believe that once we start to see businesses reopen, this will drop drastically. But for now, this is only what's reported. And you have to understand there are a lot of companies that are still hanging on to their employees. And eventually, if this goes long enough, they'll have to let go and lay off employees as well. And this number will continue to skyrocket. If you guys don't know, during the Great Depression, we had a 3.1% unemployment rate in 1929, which was the first year of the Great Depression. And of course, everyone talks about the 25% unemployment rate of the Great Depression, but that didn't really happen until 1933 and 1934, after we went from 3.1 being all-time lows pretty much. And that's very similar to where we're at now. If you look at unemployment rates from last year, we were at all-time lows. I think it was a 3.2 or 3.1% unemployment rate, very similar to the Great Depression in 1929. And of course, in 1930, we saw the 3.1% jump to 8%. And then in 1931, we saw the 8% jump to 15%. And then by 1932, we were at 25%. And then 1934, 25% unemployment rate. And so just in the last week, we've jumped from 3.1 being a historic low to over 5% unemployment rate. And that's just with what's been reported with the record 3.28 million jobless claims that were filed here over the last week. And so understand that that number is going to continue to rise. And as that continues to rise, the $1,200 that the government is sending every American is not really going to help at the end of the day, because $1,200 isn't like losing a job. Losing a job is a lot more detrimental. And of course, I understand the economy is shut down right now. Everything's at a standstill, which will eventually reopen. But it's questionable to understand the time frame here, because it's not dictated by us, but it's dictated by this virus. And so I think that there are a lot of questionable things happening right now, but Bitcoin is a solution to this. And I think that's why we're seeing Bitcoin already prove itself. If you look at Bitcoin, we're up over 75% from the recent low. I'm expecting a great pullback. And I'll tell you this right now, for those of you watching, Nicholas, M, Charman, Wen Lambo, Sean, when Bitcoin starts to go down, it breaks 6,000, don't be scared to start dollar cost averaging and buying the dips, because what always ends up happening is Bitcoin dips and everyone freaks out and they're like, oh, well, it might dip more. Let me not get in. But then when it's at 6,900, about to break 7,000, everyone wants to jump in. And it makes no sense. It's emotions. Trading is all about emotions. And that's why you have to realize at the end of the day, the fundamentals are there for Bitcoin. I believe that investors are going to flock towards a deflationary asset as we start to see more economic stimulus being put forth by the federal bank, and that continues to devalue our currency. And now investors are going to need some sort of deflationary asset. And with the Bitcoin halving coming up in less than 50 days, the supply gets cut in half. Demand either stays where it's at or increases and shoots through the roof. And I say that because realize, if you look at the balance sheets right now, it's not just our bank at these huge numbers. We've got pretty much every major bank in the world with major economic stimulus propping up their economy, which is all artificial. It's literally them printing money and saying, well, this is the stock price now. And you can see, yes, we saw record days in the stock market over the last week. If we look at the S&P 500, let's pull up the Dow since we didn't look at that yet. You can see we saw a huge push up. We're over 20% up from the recent low made by the Dow. But realize this is all happening because it's fake. It's artificial. The Fed's balance sheet went from 4 trillion to over 5 trillion now. And so realize they're going to continue to pump money into the economy, which eventually will devalue the dollar even more. And we actually saw that today. If we look at the dollar value's strength, you can see here, dollar value starting to drop here on the 4-hour. On the daily, it initially went up before economic stimulus was put forth. And then as soon as we start to see the quantitative easing measures put in place, obviously you can see now prices starting to crash when it comes to dollar strength. Sorry, I've just been doing a ton of research, a ton of trading. I'm still in my shorts right now, and I'm just profoundly disappointed in our government and the way they're treating this and handling this. But to be honest with you, I think no matter who's in office, no matter who's president, there's not much we can do at the end of the day but realize that people have to wake up, and people have to realize the US dollar here is being propped up and will start to devalue itself even more as we start to see these balance sheets increase. And what ends up happening is as our balance sheet increases, we lead the economy when it comes to a global perspective. And as you can see here, anytime we've started to print more money, other countries will follow. And so don't expect this to stop with the Bank of Japan or the Bank of China. Realize they're going to start artificially pumping their economies up. And now there's one solution to all of this. And in that case, in my opinion, it's going to be Bitcoin. It's the one deflationary asset that's global, worldwide, and outside of any government control. You can't just sit here and print Bitcoin. As a matter of fact, supply gets cut in half in less than 50 days. And so I'd love to hear you guys' opinion on that. Sorry for ranting. I'm just, I'm just really passionate about getting the message out there, because the best thing that you guys can do at this point is to educate those people around you on what's happening right now. For those of you that understand the financial system and how the economic machine works, if you guys want to understand this a lot more, I would watch Ray Dalio's video, How the Economic Machine Works. Great video on YouTube, over 30 million views. Ray Dalio, founder of Bridgewater Associates, the biggest, largest, and one of the best hedge funds in the world. Ray Dalio, the founder of that, the one that lost less than 1% in 2008, while every other hedge fund lost 60, 70%. He said that in the video, there's traditional cycles of markets that last 10 to 12 years. And of course, 2008 was the last recession. 2020 is here. That's 11 years. It's time for the recession. In my opinion, it's going to be a fast one, just like the the chairman of the Fed said, but it's just a matter of how long is this going to prolong. The longer it lasts, the worse things get, but we can't reverse the stimulus that's put in place. At the end of the day, the Feds are printing the money. Once the money's printed, it's printed, the value of the dollar goes down. You know, somebody in one of our last videos said, oh, well, where's the military behind Bitcoin? Bitcoin doesn't have a military back in it. Well, any military of any major country is all pretty much based on the currency of the country. Look at any global power. They have a strong currency first and a strong military second. Everything revolves around the federal bank. And understand that without money, the military wouldn't be as good as they are. And so the economy is what really matters here. And so, you know, we're really catching all of these countries with their pants down. And it's not something that's new to those of you that have watched our content over the last 2 years. It's something we've talked about in the past. It's something that most of you that understand Bitcoin's fundamentals will understand. But for those that don't understand it, I think it's important to educate yourself on it right now and let those people close to you know what's happening as well. Because the ones that really get screwed over here are the bottom 50% that hold cash in their bank accounts, and they don't realize that the value of that cash is just going to continue to demolish and go down, while those holding assets, those that understand what's happening, those that are diversified into other assets like Bitcoin, are the ones that are going to win in the long term and the ones that will come out of this unscathed. So very, very interesting. Sean says, education is king. M. Charman says, crypto is very volatile. Yeah, well, you could say that about traditional markets as well. When Lambo says, Ray Dalio is the CEO of the Illuminati Club. I wouldn't say that. Sean says, also join Naeem's Discord if you're not in it already. Yes. Mix says, MLX, are you reading this? Yes, I am live on Twitter, Facebook, Twitch, TradingView, and a couple other platforms. Sean says, everyone just remember we're in early BTC. Well, you know, I'm really liking the formation here. I'm really glad we broke this flag sooner than later. And the reason I say that is you can see it's not just that level of support that's holding here. So you can see we've got this level here, right? So this is where we initially bounced from. And if we pull up this chart here, you can see when we look at price action here, price action went and bounced here as soon as we saw that massive sell-off. And we all know how this sell-off occurred. If you guys watched our video 2 weeks ago, we talked about the big issue with derivative exchanges and how the liquidations caused this massive sell-off to go a little bit beyond what it was supposed to be. And as you can see, I think the biggest positive here is when we look at volume here, we saw a bigger buy volume pressure than we saw sell volume pressure. And so knowing that and also seeing how it's acted over the last few days, yes, we formed this bear flag as we should after a big drop, but the volume, in my opinion, is on the bullish side, knowing that we've got all of this green here, and it looks like the sell pressure has shaken out all of the bigger sellers, and now we're starting to see accumulation occur, and it looks like the majority of that accumulation occurred down in this area. And so that brings us to that next level of this flag that's forming here, because what's interesting about this formation is if you actually draw this out like this with that initial level, it's not a perfect channel. And when it comes to technical analysis, you want as much perfection as possible when it comes to looking at patterns, right? So this doesn't look like a perfect channel, but the perfect channel does come in when we start to draw out the level coming from this area and finding support. As you can see here, we start to see there's a more in tune channel here forming. And what's very interesting about this channel, let's go ahead and make sure this draws out properly. I believe it's a little bit lower here. It's really where that that 200-week moving average is sitting. And so you can see that's the channel here. The 200-week moving average, we already know that's around 55.50 to 55.80. So we draw 55.50 to 55.80 right around that area. And so when we go into the micro, and you can see this isn't perfect, but it makes more sense to see it this way, because what you realize is you've got this zone here that's created where it looks like it was a very, very strong accumulation area. And we also talked about how Bitcoin likes to bottom out. This looks like a very, very solid bottoming formation here. I know this is an hourly, which is a very, very, I would call it insignificant chart when it comes to the long term. But realize it truly looks like we saw some great accumulation here. You can see volume to the buyer pressure side here. And then, of course, as soon as we pushed up to this area, volume just went away. And so I think the preferred area to accumulate at this point is going to be as we come back and test that 200-week moving average, which is that dotted line. And so it's going to be really in this sweet spot here before I think we'll see a bounce. And of course, now we're beyond this bear flag as we've already broken that bear flag and that's already confirmed itself. So at least we get out of the bear flag and we preferably find support here. And I think anything below that 5,500 area is going to be even better of an opportunity to get in. But you can also see here with volume on this end, we've got a lot of volume here. So I know this isn't a perfect chart. I'm just scrabbling right now. But you can see a more clear, concise chart here with all of these levels that I drew out earlier. And these are all major weekly levels, and that green is representing that 200-week moving average. And so that 200-week moving average being very important in my opinion. And then you've got these very, very strong levels of support right below that. And of course, that accumulation zone in this empty area, it just makes sense to me for price action to come down towards that. I think over the weekend, we'll test this area. You know, we might see a push back up here, and then we might see that push down, test that previous support as resistance, finally come down here. And I think that's where we're either going to wick in, we may come down, and then finally push back up. And of course, the confirmation will be breaking back above this line right here that you can see is part of the big ascending bullish triangle that's forming on the daily chart. So you can see that's really that big support level here that we want to first break and then eventually move beyond. And so if you guys agree with that, let us know your thoughts. Sean says, if anything, if I'm not in BTC, buying real estate on the cheap. When Lambo says, best way to make money with crypto is to stack during low cycle and sell into bull cycle. Somebody said that looks like a head and shoulder. What looks like a head and shoulder? What really happened here was a double top. It wasn't a head and shoulder. So this was a clear double top. And that's the other thing. I'm glad you mentioned the head and shoulder actually, because I want to definitely show you the double top that formed. And we want to see that completion of the formation as well. So if we look at actually what happened here, I'll go ahead and zoom in this chart for you guys. You can see we did double top here. So we pushed up, we double topped, and that was a perfect double top, literally the same areas where we wicked, and then now we're pushing down. So we at least want to come down to this area where we saw that previous support to complete that channel and that double top. And that also coincides with our target here of that $5,500 to $5,600 area, which is right in this little zone right here. So I think that's very important to watch there. But yeah, we did double top there. It was a failed bullish triangle, but we already knew we were in a bull flag or a bear flag anyway. So that's why we made sure to point that out. But you can see at first, this was the failure of the pattern where we had this formation and that double top at the top of the ascending triangle. And then of course, as soon as we push down there, we called a short. And now I've got a short pretty much right up to that break point with a break even stop right now. And I think that's going to hold true to itself until we may see that pushback, like I said, from that $6,000 area back up through the weekend, because I think it's really going to determine itself based on how traditional markets open. But glad you brought up that the head and shoulder. But this was more of a double top, in my opinion. You can see here that we did call this inverse head and shoulder. We did form that shoulder, head, shoulder, and then we broke out there. So there was an inverse head and shoulder, but I don't necessarily see a head and shoulder here. So I'd be interested to know what you're talking about when you say there's a head and shoulder pattern forming here. Chris says, great question, Albert. Albert says, question about traditional markets. You say traditional markets pumping is fake because of the Feds. Can we expect to see lower lows because of that? You know, it's hard to say at this point because when you look at their balance sheets, it's just ridiculous. I mean, you can see they went from 4 trillion to over 5 trillion very similar to what they did here in 2008, right? So realize, I believe that as this virus spreads and businesses have to continue to lay off people, that this will only have to increase, because in reality, it looks like our economy is doing well, right? And we pull up this chart, we look at the Dow, it looks like things are doing well, but at the end of the day, this is all artificial. It's all fiscal stimulus, and in my opinion, it's needed right now. Interestingly enough, I was watching an interview with the chairman of the Feds, and he was asked a very, very thought-provoking question that I loved. And he was asked the question, what'd you learn from the 2008 crisis? And he said, well, what we learned was we didn't act fast enough and we didn't act intense enough. And so you're seeing them do the exact opposite this time. They're acting really fast and they're acting very, very intensely when it comes to stimulus. They're implementing a lot of stimulus very fast. And so now that we're over 30% down, and the 2008 being the Great Recession being about over 50% down, we're almost 40% down at this point. I think we could have possibly found the bottom when it comes to traditional markets. And it's not because the economy is doing so great right now, but it's because we're going to find stimulus from the federal banks that will ensure that the economy doesn't continue to bleed. Now, the downside to that is we end up with hyperinflation, and that starts to devalue the US dollar. And the reason that happens is because they're printing money, artificially propping up equity prices, and now the dollar becomes less and less valuable, and other countries will eventually follow. And so now we've got this whole economy, a global economy, that's artificially really it's artificially made. And investors will start asking themselves, well, if that's the case, why do I have my money in equity markets? I'll just put it in tangible assets like gold. I'll start putting it into tangible assets like real estate. Well, even real estate under a military order doesn't really do you much because the government can take that over. So, people will start looking at tangible storages of value, and we've only really got precious metals right now. And yes, there's other storages of value that we could argue that are possibly feasible, but really it's only gold and Bitcoin. And so I think Bitcoin can really play a big part here. We see right now with physical gold demand not even being able to keep up with the amount of demand, so the supply of physical gold is not being able to keep up with the actual demand of it. That's why we're seeing spot prices of gold soar through the roof. So I think that was a great question. Do I think we'll see lower lows? I don't think. I think the worst would be a double bottom here. We have this major support level that we're finally back above, and so I think we're seeing the worst of it. We're closer to the bottom than we are the top. That's why I don't believe we'll see further lows with Bitcoin. I think there would really have to be a tragedy in order for things to go lower. But at the end of the day, like the Feds are saying, no matter what happens, they're just going to keep printing money. And so, yes, that works in the short term. It looks good on the books. It looks good in the markets. It looks good in people's 401ks. But that comes at a big cost when it comes to hyperinflation, which will really hurt the bottom 50% than anyone else. And so understand, with unemployment rates seeing the highest ever jump, it makes sense because we've never seen a global pandemic like this before, but realize that this is just the start, and this will most likely continue to edge higher as it did during the Great Depression. Like I said, in 1929, during the Great Depression, there was a 3.1 historically low unemployment rate, and that immediately jumped to around 8% by 1930, and then by 1931, that jumped to 15%, and by 1932, 1934, that was at 25%. So that was a very long depression over 4 years, and it really, really hurt people. I don't think this is going to be a depression, and the reason I say that is it mentions it in the article by the Fed's chairman. Our economy is fundamentally really, really sound, but we're going through a health crisis, and until these businesses can start opening up their doors, things are just going to get worse. And so I believe that there could be a very fast and easy recovery, but I don't think it's going to happen on our timetable. I think it's going to be determined by, the virus, and that's not a good person to give the clock to at the end of the day. So, I hope that makes sense. So everything has a cost to it, and the cost of artificially propping up an economy by printing dollars is only going to push more people towards some sort of deflationary asset. And in this case, we have Bitcoin, and this is what it was built for. And I think that's why we're seeing Bitcoin up over 75% from its recent lows. Do I believe we found the bottom? Absolutely. Matter of fact, you can see here, we've got all this strong volume here. Even at these higher levels, we're seeing a peak volume. So people are accumulating even at these higher levels near 7,000, right? You have to say to yourself this: at the end of the day, if you would have bought Bitcoin at the bottom here in December of 2019, when everybody was fearful to purchase, you'd still be at a negative return right now. But these people that accumulated here, this was a great zone to accumulate, are probably still holding. I don't think they're going to be selling anytime soon, even when price goes at 7,000 or above 7,000, because they're barely in a profit at that point, right? The majority of people that we see hold Bitcoin until they're around 80% profit. There was a study done, and it showed that most Bitcoin wallets liquidated their Bitcoin after being in profit over 80%. Another study shows more people hold Bitcoin than trade Bitcoin. I think that's why we see more derivative trading than we see spot trading. And there's not many markets like that. Matter of fact, most markets are the complete opposite, where there's more spot trading than derivative trading. And so, obviously that comes at a cost when it comes to seeing these type of liquidations like we saw here on March 10th with the big drop. But, everything has a cost to it. So Mick says, where's the feds going with these adjustments? Why me? So we Todd did. I don't know what the end of your question just said. Mick says, seriously, why is the Fed saying why me? So Todd did. I don't know what you're saying. When Lambo said, I sold my kidney to buy one more BTC. You know what I like about you saying that, when Lambo? At least you're not saying that when Bitcoin's at $20,000, right? Like people did back in 2017 when it was at 16,000. They were taking out mortgages on their home and refinancing it to buy some Bitcoin, and now they're really screwed up. I like that you're saying that when Bitcoin is at an 8 when it comes to fear and greed index, and everybody's in extreme fear. I think that's actually might be a good play there. Kron says the virus will last forever. Government only wants power. Very interesting there. Sean says, I agree with you 100%, Naeem. Thank you, guys. When Level says, dump your helicopter money into Bitcoin. Aonian says, love this. Learning so much by seeing how you do in the charts live. Awesome information in general, too. Thank you, man. Appreciate you. Well, I'm going to wrap up this video. If you guys enjoyed this, like the video. It went longer than I expected, but I had a lot to talk about, and I'm kind of going to probably wrap up my night at this point. I've got my short in, break even stop. I think that's going to do pretty well here at this point. We had a great week of trading. I'm going to try to cool off a little bit. I'm going to watch the charts, obviously, and update you guys accordingly. Let our analysts try to take control for the weekend. Also remember, we're under a death cross right now. One thing I want to point out is anytime we're under a death cross, or as a matter of fact, anytime we're so far away from these moving averages, realize Bitcoin does like to come close to them, right? So right now you can see with price action, we're about 25% away from all of these moving averages. They're all kind of converging together here. But you can see anytime we've seen price action move too far away from these moving averages, either the moving averages come closer to the price action or the price starts to move up, right? So price action doesn't seem to like to stay too far away from these moving averages. You can see that at this point we went pretty far, 28% away, then we eventually pulled ourselves back up, right? So, it seems to me that anytime price action moves, 25 to 30% away from these moving averages, it likes to pull itself back into them, at least to touch some of them, or I guess that's the best word to put it. It's to touch them, right? And so, we're so far away from these moving averages. We're going to expect them to come down. So I think it would make a lot of sense for the price action to do what we're saying, you know, come down here to the 55 area where we've got this volume, and then possibly uptrend from here, right? And just do a traditional higher high, lower low, higher low, lower high. So it's going to be interesting to watch where things go. But obviously right now in the short term, we're bearish. In the medium term, we're neutral. And in the long term, we're bullish. And I think that's the perfect way to end this video. Thank you guys for watching. I hope you guys are staying safe out there. This is the best time to learn how to trade. This is the best time to create an extra source of income. This is the best time to be behind the charts, because this is a skill that you'll never lose. And I don't care what virus, I don't care what boss, I don't care who, nobody will be able to take away my skill of trading and being able to make money in these financial markets. And so I hope you guys find a skill that nobody can take away from you, so that you aren't subject to what the government does, what happens to the US dollar, and that you're fully educated on what's happening behind the scenes. And so, you know, as I mentioned before, the best thing you can do right now is educate those who are uneducated on what's happening, because the ones that really get hurt here are the bottom 50% when it comes to hyperinflation. And so we're going to see that with these balance sheets going up. This is just the start. And so, you know, what really, really scares me is just realizing how high this could go. I mean, if this continues to go up, it's just looking really, really dark for the future of our currency, which in the end game is the future of our country. And so realize that this isn't doom and gloom, but what I am saying is Bitcoin is a very, very attractive asset right now, in my opinion, when it comes to the value you're getting for what you're getting at these lower prices, and for the fundamentals of Bitcoin being, not backed by any government or central authority, being a deflationary asset that has deflationary properties built into it, as we are going to see in less than 50 days with the supply being cut in half. And so, there's a lot of positives here for Bitcoin. So thank you guys so much for tuning in here. Sean says a perfect climb. See you in Discord. Cyborgatron out. He's about to hit level 15, by the way. Good stuff, brother. Last question, Hourglass. Do you think it is possible the market cap of cryptocurrency could exceed the amount of dollars there are in the world due to inflation, therefore making crypto more expensive than fiat? Very interesting question. The USDT Tether Treasury just surpassed 6 billion in USDT. I don't know if you guys saw that headline recently. What that shows me is more and more people are looking to get into Bitcoin. And I say Bitcoin, not cryptocurrencies, because we look at Bitcoin dominance and it's obviously shown strength over the last few months, if not the last year now. And so I think that we're seeing more US dollars turn into Tether, which is a digital form of the US dollar, which eventually will come into Bitcoin, right? So 6 billion just got minted by the USDT reserve. And so realize at the end of the day, even the feds could start pumping money into Bitcoin if they wanted to, because they just print money, right? So to answer your question, what I would say is, when looking at the 5 to 10 year perspective, and to tell myself, where, as an investor, where do I want to hold my capital? What assets do I want to be holding in the next 5 to 10 years? Matter of fact, even if I was in the bottom 50% and I only had $500 in my bank account, or I think 80% of Americans don't even have a $400 emergency fund. Even if I had $200 in my bank account, I'd put 100 of those dollars into Bitcoin, knowing that in 5 to 10 years, I think that a market that's less than 200 billion in market cap has a much more I'd say it has a higher potential of 10xing, 20xing, 30xing than an equity market that's ages old and already in the trillions of dollars in market cap. So what I would say is, beyond your question about value of the Bitcoin versus the amount of dollars in the market, I would say the big question is, what where do we see bigger growth potential? And I would say Bitcoin in the cryptocurrency market for sure, specifically Bitcoin. I'm not talking about altcoins here whatsoever. I don't think many of these altcoins will be around. I know some people love to tout altcoins. I just see them as something to trade like penny stocks. Until an altcoin really impresses me, I'm not going to be big on any altcoins. As much as, you know, you've got CryptoKitties on Ethereum being the highest and most use case of Ethereum, it doesn't impress me. And so just realize that at the end of the day, Bitcoin, in my opinion, is where all eyes are going, and it's really time for it to prove itself over the next few months. So just like in 2008, how gold continued to drop with markets and then finally rose up, you know, and really saw strength as we bottomed out, I think Bitcoin will follow the same path as it already has been. It's already 75% up from its recent lows, while traditional markets are only about 20% up from the recent lows. So realize that if we did find the bottom, which I think we have, then Bitcoin is going to start to trend up at this point. And the price levels that they're currently at, in my opinion, are extremely discounted. Do I think that there's more opportunity for discounts? Absolutely. So we'll see. We'll see how that 200-week moving average holds up. I think regardless, we'll see a bounce. We know that's a major support from not just the flag, but the 200-week moving average. So anyways, hopefully I answered that question. Thank you guys so much. I don't want to take up too much of your Friday night. I know it's already 46 minutes in. I'll see you guys on Monday. Have a great weekend. And Sean says, "Hello, the little 1,200 the government is giving me, I'm going straight into Bitcoin." That is a good way to end the video. What do you do with the $1,200 that the government gives you? Put it into Bitcoin. That's the answer. Thank you guys so much for watching. I think that's your best bet at this point. I don't think the US dollar is going to have much value if all they're going to do is print it and print it and print it and print it and print it. So thank you guys so much for tuning in, and I'll see you guys on Monday, and I'll see all of you on the Discord in a few minutes. Thank you guys.